What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Wednesday, April 10th. All right, guys. Well, SPY here today up 60 cents per share. That's plus 0.12%. Tomorrow is a tremendously important day. Just really quick rundown here. Don't forget, 1 hour before the market opens, we get CPI, which is 4 numbers here. Really quick, the forecast for CPI year over year is 3.4%, month over month, 0.3%, core year over year, 3.7%, and core month over month, 0.3%. Okay, 15 minutes after CPI hits, which of course CPI is the highly important inflation read. 15 minutes after that, Fed's Bowman is speaking. All right. Fed's Goolsbee is speaking at 12:45 p.m. Eastern Time. And then at 2 p.m. Eastern Time, we get the FOMC meeting minutes. Tomorrow is a tremendous day. And then, of course, Thursday, we're also getting PPI. But let's focus on tomorrow. Let's take a look at SPY here and pull out as much bias as the market was willing to give us here today. Get a well-rounded view as we head into tomorrow's highly important day. Let's start here with our volume profile analysis here on the 5-minute chart, to kind of peel back a layer of the onion and try to pull out some directional bias out of the moves that we got today. Listen, by the way, SPY is a daily upload, okay? It hits every single trading day at 6 p.m. Eastern Time. If you have not done so already, please subscribe to the channel, and I'll keep the SPY videos coming. So the moves that I want to take a look at here, that dump off the open and recovery, and then this pump that we got into the close. Those are the two that I'm primarily interested in trying to pull out some bias here today. We got a contextual open, that higher volume opening bar, and then a quick fade, okay? On this big downside move that we saw into the intraday low, this one here, we got some pretty obvious, out of context, bearish bias, okay? That supports that move downside. And then on the recovery, we saw volume tank off, okay? So there's some pretty obvious bearish bias there in that downside move. And by the way, the volume profile bias, the reason we're looking at this is because it actually pretty consistently doesn't correlate with the price action. Like I said, it's like peeling back a layer of the onion here. So seeing a supporting factor, bears, you guys like to see that, but that's not always the case. That's why we have to take a look. Now, heading into the close, we of course saw a little bit of a pump, right? But what's interesting is we're not really seeing any tremendous bullish bias. We see this big volume bar into the close. Really commonly on SPY, we'll see a large last volume bar of the day. That's Fed's funds, and institutions doing some rebalancing, okay, heading into the close. So that's really, really normal. Let's move on here to the 30-minute chart and take a look at the psychological self-fulfilling prophecy levels that a whole bunch of traders, and you guys should be paying attention to here tomorrow. So if you guys remember yesterday's video, we had held on to both of these, both the 50 and the 200 period moving averages here on the 30-minute chart into the close, but it was really, really close, right? We closed on top of that 50 period. So today we're watching these closely. We gave them up early on big volume. However, the bulls said we're not quite ready to give those up and reclaim both of them late in the day. However, a late day reclaim like that, this is anybody's ball game. So listen, bulls, any retest of that 50 period tomorrow, I want to see a high volume hold. Any volume at all on the retest, I don't care, as long as we see a bounce away from that level on higher volume, ideally, than what the retest was on. Bears, your best case scenario is to give up both the 50 and the 200 period moving average here on the 30-minute tomorrow, doing so on the break on big volume, and then retesting whichever moving average is lower at the time, okay, on lower volume. So big volume break, lower volume retest, and then boom, high volume confirmation to kind of confirm that as a short-term area of what's seen as resistance. All right, let's move on to the 4-hour chart here. You can see that this is, the 4 hours very much so in play here. So listen, bulls, we've been struggling hard to reclaim that 50 period moving average. It's time to do so. Right? It's been a few days. We've just been rejecting. It's time to reclaim that 50 period. Again, very similar. Get above on high volume, retest the 50 period, which is that white line, of course, on lower volume, and then boom, high volume confirmation, pull away on big volume to try to force that thing to flatten out. If not, start to curl a little bit back upside. Bears, you guys want to see as high volume rejection off that 50 period as possible, similar to what we've been seeing the last few days, but you guys haven't had any follow through. You need to follow through, and you're looking to break the 200 period to the downside on big volume. You haven't been able to do so, Bears, so I'm not just picking on the bulls. You Bears have had no follow through either the last few days, so it's time for this thing to pick a direction, and that news may just be the catalyst needed to do so. Okay, but paying very close attention to volume on those breaks. Now let's move on to the big story here, which is going to be the daily chart. All right, this tells us the most obvious story. This is a story that has the most eyeballs, okay, because the most amount of people are watching the daily. Now you have that 50-day moving average sitting at about 508, okay, so not immediately relevant, but of course, you bulls, you want to stay above that. Now listen, the obvious story here, guys, is very similar to what it's been as of late. Three things. The immediate story is 520. Can the Bears reject off 520, or can the Bulls reclaim 520? That round number. Every $5 increment on SPY is going to be a psychological level, so 520 is the immediate concern. Bears, reject off 520. The next target I'm watching to the downside is 515 as a potential support level. Okay, Bulls, get above 520 and hold. Look to potentially use 520 as a trampoline to head up to that next level I'm watching, which is 525, which also happens to be an all-time high, so likely to act as a psychological resistance up there. All right, implied volatility has come down the last few days, still in the mid-range, okay, compared to the last couple of months, so make sure you're keeping that in mind when you're looking at especially any options trades, existing or new. Now, we are very spoiled on SPY because we get daily expiration. So let's look at expected move. The expected move by the close tomorrow is plus or minus $4.71 per share. Okay. By design, there's no directional bias there, but there's volatility bias, which is a necessary piece of the puzzle. We try to get our directional bias from doing the entire analysis, right? The psychological levels, the technical levels, the trading activity, the volume profile. We then try to get the volatility bias by looking at obviously the expected move, decide, okay, how do we feel about that? Do we think it's going to be more or less, okay, to help us position ourselves more effectively? But we can do one more thing here to get directional bias. 8.14 million total contracts traded here today. Okay, 3.86 million of those were calls and 4.28 million were puts. So we're seeing a slight bearish bias on the overall call put ratio. But if we break this down by time frame, 0 to 20 delta range, these are the short-term speculators here on SPY. 1.54 million calls, 1.88 million puts. So we're also seeing a slight bearish bias out of the short-term speculators heading in to tomorrow. But again, this chain, the volume's high. Okay, so it's a good sample size, but still just one factor of many covered. Hope that helps, guys. If you get value out of these videos, subscribe to the channel. The SPY video hits every single day, 6 p.m. Eastern time. I appreciate it, and I'll see you in the next one.